I clock into the charts, and this one strategy, well, it's consistent. I literally call it my daily paycheck. I don't need 10 setups. I don't need 8 hours a day. I just need this one model based on smart money and ICT concepts that shows up almost every session. Now, it works because it's rooted in how the market is designed to move. First, price hunts liquidity, either above highs or below lows. Then we get to displacement movements, showing how smart money actually steps in. Structure breaks and fair value gaps form. And that's my entry point. It's simple, but it's effective and it can be repeatable. Last week alone, I used this setup 4 times and hit between 2 hour and 4 hour every single time. No stress, no random trading, and just clean execution. Now in this video, I'll show you the exact pattern I took looking for each trade in the morning, how I prep my levels ahead of time, and how the trades paid me like clockwork. If you're looking for something predictable, a setup you can show up and rely on, this might be your daily paycheck too. So now it's really simple, and let's get into it. Before your trading time, you don't do absolutely anything. We're just going to come to the charts like this. As you can see, we have price making movements before our trading time is making higher highs and is making higher lows. So once we get to our trading time, this is where the magic happens. Anytime after 8 a.m. UK time, well, NY time, 8 a.m. NY time. So let's just jot that down really quickly, 8 a.m. NY time. Let's also note that we're going to be on the 3-minute time frame. Okay, cool. So 8 a.m. NY time and the 3-minute time frame. So how I like to do it, once we get to our trading time, it's really simple and it's a model I think you guys should always follow. We try to identify where liquidity sweep has happened once we get our market structure shift with displacement. So you can see we have a market structure shift with displacement of this low. We can make sense of everything. So we had a liquidity sweep right here. Let's just mark this out really quickly. And then we have a rejection of the high just above here. And then we have a market structure shift with displacement right below here. So that's a 3-step model which is worked for many years. And I think it could definitely work for you guys. So let's implement the 3-step model. So again, if you know this model has made me over $150,000 a month. Now it's very reliable, and I think you guys should watch all the way to the end of this video. And again, if you want us to manage your funded challenge and get your payout without ever paying a single penny upfront, click the link in the description. You'll see how we've helped hundreds of clients get their first payout, and they only paid us after they got a payout, which was 30% of the profits, and they kept 70%. So click the first link in the description. But yeah, it's really simple. We have a liquidity sweep. You can see we have the rejection of the high right here. It's amazing. And what I mean by the rejection of the high, you can see how we had an attempt to break above this high, but it failed. So that's our rejection of the high. And then what happened? We had a market structure shift of the low. So as you can see right there, boom, perfect model. What we're going to do now, we're going to grab the Fibonacci and we're going to mark from high to low. So once we mark from high to low, we're going to wait for price to actually retrace into our 62% zone. So you can see our 62% zone is right here. Boom. Boom. There we go. So that's our 62% zone. We're going to enter a short position like this. Just put it above the high. And then we're going to target a nice 1 to 2 hour. Well, you can target more than 1 to 2 hour depending on, what's actually going on in the market and if there's liquidity points to actually target. So let's come to our trading time now. Let's get into the action. Don't forget, if you want us to pass and manage your funded challenge, click the first link in the description. Remember, you don't pay a single penny until you do get that payout. So let's go. As you can see, the market is doing whatever it wants to. It's going up. If it wants to go up, it can go up. If it wants to go down, it can go down. And boom. As you can see, what we have here is that the market finally broke below the low. So we can look at that on the 5-minute time frame. As you can see, the market finally went below the low. So what we could do, we can mark from here to here. As you can see, boom. We can mark from here to here. And what we're going to do, we're going to wait for price to retrace into that 62% zone. And as you can see, it did exactly that. So the 62% zone we're actually looking at is right about here. And yes, it would have been an entry because, spreads would have definitely put us in this trade. The stop loss, it can be this wide, maybe 7 pips just above the high. And like always, we target 1 to 2. So let's just play that back. As you can see right here, we target 1 to 2. So like I always told you, you can target more than 1 to 2 depending on what's happening on the other side of the market. So you can see we have all of these liquidity points here that needs to be filled in. We have imbalances and everything occurring on the opposite side of the market. So what's actually going to happen now? Boom. As you can see, it does end up pushing way lower and taking out all the liquidity points. So it ends up pushing to about a 1 to 6. But again, we wouldn't notice. We can only hope for it to push that far. So like I always say, for your safety and for guaranteed profits, just target 1 to 2 or, you know, it's meant for consistency and it's meant to help you grow in scale in these trading markets. But let's waste no time and let's get into the second example. And don't forget, we can help you like we've helped many other traders get a payout before ever paying a single penny. Again, you pay us 30% of the profits, you keep 70%. But as you can see, we come to the next trading example right here, which we have right here. So you can see we let the market do whatever it wants. So if it wants to go up, it can go up. If it wants to go down, it can go down. So you can see at this point, the market did have a crazy dip. So that crazy dip was beneficial because what this dip was actually a liquidity sweep. So you can see the market took out all of this liquidity here. And now what it did, it uses as a liquidity sweep to use momentum to push back towards the upside. So what's going to happen now? We're just going to mark from here to here. Boom. As you can see, we do get tagged in. Boom. And it's just about 8 pips wide. So what we could do is we can target a 1 to 2 R gain, like I always showed you guys. And yeah, of course, it does end up going much higher. Why? Because I told you guys, if there is liquidity points towards the other side of the market, which we can target this exactly right here. So I hope you guys did enjoy this video. Don't forget to like, comment, subscribe. And again, if you want to get your funded challenge pass, manage, and get a payout, click the first link in the description.